Welcome to our weekly roundup of key economic and business developments in Sri Lanka for the week ending 7th April. I'm Nishani Pigera, and here are this week's top stories. Gradual economic improvement from second half of 2023, says central bank. Policy rates remain unchanged. Sri Lanka economy to contract 3% in 2023, says Asian Development Bank. OPEC Plus cuts oil output, prices rise. Sri Lanka among the top 23 best places to travel. In our main story this week, on Tuesday, the Monetary Board of the Central Bank left policy rates unchanged. In a statement, it said that Sri Lanka's inflation is projected to follow a faster disinflation path and that the external sector outlook has improved with the finalization of the IMF-EFF program along with envisaged further financing. The board also expects market interest rates to continue to decline and for a gradual economic recovery towards later in the year, which is to be sustained over the medium term. According to the Asian Development Bank, Sri Lanka's economy will shrink 3% in 2023 and will grow 1.4% in 2024. It cited weak export growth as a result of a global slowdown, high inflation affecting the country's effectiveness, and significant skilled worker migration as key reasons. On the positive, it noted that Sri Lanka's agriculture and tourism sectors is beginning to recover, but warned that the outlook is clouded by uncertainty on progress on debt restructuring, timely implementation of the IMF measures, political developments from an electoral cycle, and unpredictable weather patterns. Saudi Arabia and other OPEC Plus oil producers cut oil output by around 1.16 million barrels per day. According to Dan Pickering of Pickering Energy's partners, who spoke to Reuters, he said that the move will raise oil prices by about $10 per barrel, while Goldman Sachs increased its forecast for Brent to $95 a barrel by the end of the year and to $100 a barrel for next year. Forbes magazine ranked Sri Lanka among 23 best places to travel around the world in 2023. It noted of many places to see in a relatively short distance, highlighting Yala, Nuwara as well as cultural attractions in Anuradhapura and Kandy. Meanwhile, Tourism Minister Harin Fernando told the Daily FT that the annual target for 2023 has been revised upwards to 2 million from 1.5 million. However, on a negative note, the Foreign Ministry of Germany issued travel warnings on travel to Sri Lanka. A detailed reason for such warnings was not provided. In other news, according to the Public Utilities Commission, Sri Lanka's electricity consumption has reduced by 20% after the 66% tariff hike in February. It warned that lower demand is likely to threaten Sri Lanka's economic revival despite approval of the IMF facility. The Commission also added that spending on energy has more than doubled due to the 2 tariff hikes in the last 12 months. On Wednesday, the existing fuel quota for all vehicle categories was increased. According to Kanchana Wijesekara, quotas were increased for the New Year festive season and that the Ceylon Petroleum Corporation has procured the necessary stocks. Meanwhile, on Tuesday, Litrogas Lanka reduced cooking gas prices, citing declining global prices and rupee appreciation. The 12.5 kilogram gas cylinder was reduced by 1,005 rupees, while the price of a 5 kilogram gas cylinder was reduced by 402 rupees. Now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities declined significantly, with the 364-day bill falling 194 basis points. Bids amounting to 177 billion was received, and of which 110 billion rupees were accepted. The Sri Lankan rupee fluctuated against the dollar this week, with the central bank's indicative mid-spot rate ranging between 321 and 327. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for more updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.